Greetings, very happy to connect with you all through this video. A great challenging time for all of us. This video is to update you on the current market, and the agenda of this meeting is to speak about hope. Hope means hold on till the pain ends. It does not matter how long, how slow you go, so long as you do not stop. So with that context, I would like to take you through some of the data points of the current market and how as investors we should be looking at the current market. So we have three things to look at the current market. One is the COVID, the economic impact which will happen because of the COVID, and the stock market impact. On the COVID, I'm not going to spend too much of time. I'm not an expert, but as we speak, best of the minds and best of the health experts are working on in terms of finding a solution for this COVID, and we hope to hear some very good and positive news in the coming weeks or months. So with that, let's move on to the economic impact. We all know that we are still fighting with the health issues, and the economic impact of the same is yet to be seen. But one thing is sure, that the economic impact is going to be definitely large, and it is going to be a little long lasting, and it might take about anywhere between 12 to 18 months for it to recover. And about the stock market, as we know, it has already reacted. In fact, it has reacted as if things are not going to come to an end anytime soon. So we will try spending some time to understand what is the economic impact. So across the globe, the GDP estimates have got revised. 2 months before, the entire data was different, and post-COVID things have definitely slipped on the downside. Right from India to US to Italy to Germany, all your GDP forecasts have actually gone for a toss, and many economies will actually degrow. So if you take US, the estimate is from about plus 1.7%, they will move to a minus 2.8%, and Germany might actually slip to minus 6.8%. When it comes to India, it will be from a 6% growth to about 2.1% growth. The only silver lining here is we still top the table and will be one of the fastest growing economy. So we also had the recent 2008 crisis. That was predominantly because of the financial crisis, and what we are currently seeing is the medical crisis. And in both the cases, whenever there is fear, whenever there is uncertainty, market corrects, and the same has happened in both 2008 and 2020. What is slightly different in 2020 when it comes to medical crises? This time it has hit the entire world, and the pandemic is still spreading. So almost every market, including India, has fallen. India has fallen at almost about 30% plus. Even the other markets have corrected. But the good news is, as we are aware that the economic impact is going to be slightly longer, even the governments understand it, and the Federal Reserves understand it, and they have already started opening up their purses in terms of stimulus. You can see across in this table, right from Australia to Germany to Indonesia to Italy to US to India, everybody has started pushing money into the market and giving stimulus, and we will see some stimulus measures which we have never seen in our lifetime, and let's hope that we should not end up in such a situation where we need such kind of stimulus anymore. So the stimulus has been across in terms of billions to trillions. In fact, US has announced a 2 trillion stimulus, which is as equivalent to Indian economy. So the governments are going to pump in a lot of money and make sure the interest rates are much lesser, so that businesses can actually recover. Of course, it is going to take a lot of time, and some businesses will actually fail, some will become bankrupt, some will go through a pain, some will actually emerge as new businesses. Like today, many of the businesses have started working from home virtually and etc. So there will be many more new opportunities also which will emerge. But the next 12 to 18 months is going to be definitely difficult for many. But the good news is all the governments are aware, and they will try and do anything and everything possible to make sure the economy is back in track. So what has India actually done? RBI has actually cut the interest rates by about 0.75%, and they've already announced measures close to about 3.7 lakh crores. and there is a lot of announcement in terms of handling the lower strata of people in terms of giving money to them, and also making sure they get reasonable food items so that they can survive. So there will be so many actions which will also happen from the Indian government also. So there are some positives also which actually emerge. In every crisis there are opportunities, and India will be one of the most advantageous when it comes to the future of economic growth, where the oil prices have actually corrected, and we all know that it is at a 18-year low. And with the bleak outlook for the global economy, the prices are likely to be low, which will be one of the biggest beneficiaries. And also we don't have much of trade deficits with many countries, so that's a great positive. Already the government and RBI started working on stimulus package, and every government is assured that it is just a start, and they will try and do as much as possible in the coming days as and when things are needed. Also, there is a large supply chain disruption because China has been one of the major suppliers of raw materials. So both at a backup level, also at a political level, there will be a lot of changes, and many businesses can actually move out of China over the coming decade. So it's not going to be immediate, but it's going to be over a decade, and India will likely be one of the beneficiaries. Naturally, India will not get everything, but we will be one of the major beneficiaries, because we have a large business setup in terms of textile, homeware, lifestyle already running, and some of the replacement buying inquiries also from US and European Union will move into India. So there will be challenges, and it's not going to be immediate, but hopefully we will also get a reasonably large share of business in the coming years. So are virus new to markets? Definitely not. Just to give you some data and history, so there are many viruses which has come, and some of the most bigger ones are SARS, the influenza, Ebola, Zika, and COVID, the latest one. In 2003, when SARS came, the market actually fell about 10%, and some of the SARS we fell about 12 to 15%, and this we have fallen about 30%. If you look at the right hand side corner, where the 1 year return post the outbreak, when things actually come under control, the returns have been actually very good. I'm not advocating that the next 1 year can give you 50% return. All that I'm trying to tell you is whenever things come under control, markets can actually bounce back. Another important thing is market valuations have actually become a lot more cheaper. So what was available at 100 about few months back, today it is available at 70 or 60 depending upon what you're buying and where you're buying. So we are at historical lows when it comes to valuation. At a price to book, we are almost equivalent to 2008 crisis levels, and when it comes to the price earning ratios, we are again at post 2008 crisis levels. We are at about 16 times trailing, so the forward actually is much lower. So at a valuation level also it is very, very attractive. Let me give you a little more history of how Sensex has actually behaved. So if you look at from 1985 to 2020, in the last about 35 years or so, we have had 9 major falls, and out of that 3 falls were actually more than 50%. And there were about 6 instances where the market fell anywhere between 20 to 50%. And the good news is, after every corrections, there has also been recovery. And if you look at the recovery data, so I'll take you the first data point. In 1986 February, Sensex was 649 points. Today actually Sensex goes up and comes down by 1000 and 1500 points, but in 1986 Sensex, the value itself was only 649 points. From there, in the next 2 years, it fell to about 390 points, which is a 40% correction. And by the end of October 1988, the Sensex actually recovered the points whatever it lost. That means it took about almost 2 years and 8 months from the fall to recovery. Likewise, in January 2008 also market fell by about 61% fall. That was the highest fall ever we saw in India, and it took about 2 years and 10 months for it to recover. So that means for every crisis markets have gone through, whenever things actually settle down and things look better, markets have always recovered. So the hope that if we survive in the next few years from now, naturally the economy is going to recover, and there will be a lot of evolution which will happen at the business level, at the individual level, at the government level, and all these things can actually make the life a lot more better in the coming months. So what you should be doing as an investor is stay calm and add incrementally if your liquidity allows. This is a very important point, because just because it is cheap, you can't put your savings today into it. If you are sure that you don't need this money for the next 3 to 5 years or so, then you can look at buying at the current levels. Also keep your goals and asset allocation as the primary point to make any investment decisions. Continue your SIPs if you can, because these are the points at which your units, what you buy actually is much more than what you used to buy at the normal levels. Health insurance has taken a very important center stage. It was always, but today it is a reminder for all of us, where if you don't have one, definitely have one at the earliest. Always have some liquid funds to cover your short-term needs. If you don't have any SIP running or a RD running in a bank, just make sure that you have one, so that any such crisis which comes at any point of life, you have some money to rely upon so that you can stay afloat. Also protect your family with term insurance if you don't have one, and if you are the only breadwinner for the family, because these are the things which can actually make a lot of difference during this troubled times. So with this, I would like to tell you, tough times never last, but tough people do. So we have seen many crises like this, and we have come out of many crises, and we are also very hopeful that we will also come out of this crisis, because the entire world and the best of the brains is working on it. The best of the financial minds are working on in terms of trying to find how to come out of this economic issue which we are going through now. So we hope that in the coming months and in the coming years, things will look a lot better. Stay safe and stay healthy. The only thing and the best thing to do to fight corona at an individual level is to stay safe, stay healthy, and stay home. Thank you for this wonderful opportunity. We'll connect you back with more updates. Thank you.